If you've been in the market at all recently, regardless of if you're investing, trading, or just observing, you've probably heard of meme stocks like AMC, BlackBerry, Gamestop, and many more at this point. Before we get onto things, welcome to the Dana Yee Show, where I cover everything money and finance related, and I suppose in this case, meme related. If you enjoy the hard work and effort I put into my videos, make sure to bop that like button and hit subscribe for more awesome content. If you've been living under a rock, here's my attempt at a quick summary of what's happened in the past. Meme stocks have become really popular through forums like Reddit's Wall Street Bets, where highly shorted and generally poorly performing companies get a lot of attention and a lot of people buy into these companies with the mentality of sending the price to the moon, aka really high. And we saw this in January with GameStop's short squeeze, where it went from around I think like $10 a share to almost $500 a share at one point. And even now I think it's holding steady around $200, $250, which is obviously a ways off the highs, but significantly higher than it was last year. And recently there seems to have been a resurgence of meme stocks, most notably AMC, which almost doubled on June 2nd. I know, a bit outdated, but bear with me. In this video, I want to update you on what's happening, why it might be happening, how this is similar and different to the GameStop situation, and what you should do about it. So firstly, for what's happening, if you don't already know, AMC is a movie theater company. They struggled in 2020, obviously, because people couldn't go out and see movies. Although they did not only struggle then, in 2019, they netted a $150 million loss, and in 2020, they had a $4.59 billion net loss. But if you've observed the market at all, fundamentals of a company and the stock price of a company are often completely unrelated. For example, for AMC, during the original GameStop squeeze back in January, AMC went from around $3 a share to $20 a share, which is a really nice jump, but nowhere near what happened to GameStop, although AMC recently went from around $12 a share to over $70 a share at one point. On June 2nd alone, it was up 95%, so it almost doubled in a single day, and it's up more than 2,800% year to date. This is such crazy stuff, you literally could not make it up. Another interesting thing about this situation is that the volume, aka the number of shares being traded of AMC, is really high. On June 2nd, I think the volume was like 710 million shares, but if you look, the float or shares available to trade is 420 million. So that means on a single day, more shares were traded than actually are available to trade, which is just crazy volume. One more thing is that if you watched AMC throughout the days, you might have seen it as suspended or halted at times. This is not hedge fund or broker manipulation or unfair practices. Well, unfair practices is debatable, but I should say it's not unique to AMC. These halts are due to something called a circuit breaker. For a single stock, they're in place to automatically stop trading of a stock for a few minutes if the stock price goes up too fast or down too fast. And AMC is so volatile, I was watching it the other day, it went up so fast it got halted, and then after the halt resumed, it went down so fast it got halted again. And throughout this whole situation, some people have made a lot of money. For example, this person made over 1,200% or over a $20,000 profit, and this person here made around 700% or $150,000 profit off of what happened to AMC. However, people also lost a lot of money on another similar meme stock. Someone is down $20,000 on BlackBerry, and I think last week on AMC, the shorts, aka people who are betting that the price will go down, lost a total of $2 billion last week on AMC. That's a crazy number. And two random things I kind of wanted to insert here. Even if you don't own GameStop or AMC shares, there's a slight chance that you might actually own them without knowing it. GameStop and AMC are part of what's called the Russell 2000, which is a group of 2,000 relatively smaller companies. So if you have an index fund or ETF that covers the Russell 2000, you very well might own GameStop and AMC without knowing it. And second random point, as of June 2nd, AMC was worth more than 50% of the companies in the S&P 500. I think at a high, it had a market cap of $31.3 billion, which is higher than Delta Airlines. This market is insane. As for why it's happening, you can never really say what moves markets, so these are just my thoughts. I really think one of the biggest things is FOMO, aka fear of missing out. A lot of people probably sat out of the January thing because they had never seen anything that crazy, and just watching GameStop go from $10 to $500, there's a lot of, oh, if I just put in even like $100, how much would that have been? And I think people think this situation might be similar, so they're like, oh, if I get in, even if it's $70, if this goes to $500, I'll still make a lot of money. Another thing that I think might be affecting this situation is algorithms or trading algorithms. Based on no scientific evidence, I think that trading algorithms like to trade stocks that have high liquidity or high volume. The more people trade AMC, the more algorithms trade AMC, and the more algorithms that trade AMC, other algorithms might notice, and it's like this circular feedback. I also wanted to contrast and compare the situation to what happened to GameStop in January. One difference this time is that I believe that more people are watching AMC because, again, this happened once with GameStop, so the attitude may be, what's to stop this from happening to AMC and what can I do to maybe make some money from it? Whereas with GameStop, a lot of people were like, it's $100, there's no way this is going higher. It's $200, there's no way this is going higher. And then they just sit out and watch. One thing that's similar between the companies is that AMC and GameStop as companies both took advantage of the situation by doing something called a share offering, which is where they sell more shares onto the market to raise capital. In general, this has the effect of diluting current shares because if you add more shares, technically like each one is worth less. So generally speaking, when companies do a share offering, the price goes down, although we haven't really seen that happen with AMC. So I do think this is smart of the company to take advantage of this crazy situation to raise money. Another really big difference is that a lot of people attribute the reason to why GameStop squeezed in January to the short interest, aka the percentage of shares that were shorted. I did cover in a previous video, but shorting is betting that the price will go down. And the more people that bet that the price will go down, if the price goes up, they lose a lot more, if that makes sense. So in January, at several points, the short interest on GameStop was over 100%, whereas AMC's currently is hovering around 20%. Obviously, this is significantly lower. Another similarity that is slightly different, was that a contradiction? Is that there are some restrictions now being placed on AMC, but it's not the restrictions that were placed on GameStop. If you'll recall, in January, a lot of brokerages were not letting you buy GameStop, but you could sell it, which artificially creates selling pressure, which causes the price of a stock to go down. But in this case, for example, TD Ameritrade, they added some restrictions on AMC, but it's not, you can't buy or sell. You can still buy, sell, and trade options as usual, but now you can only buy and sell with cash available in your account. This basically just means you can't do it on borrowed funds or on margin. So what might happen and what should you do about it? In terms of what might happen, honestly, who knows? If I could tell the future, I would know exactly what trade to place and I would be very rich, but nobody knows. There's a lot of sentiment of it might drop. For example, some analysts will say like, it has to drop because they're not doing anything revolutionary like Tesla. But a counter argument to that is it probably will drop in the future, but to what point it goes up, we have no idea. Like for GameStop, at $20, some analysts were like, I'm shorting this, it's gotta go to zero. And then it was at $200 and you're like, what? And AMC as a company actually put out a warning to investors and shareholders saying that holding the stock will see extreme volatility and potentially incur substantial losses. These are AMC's words, not mine. In general, this is a very speculative stock. I would most likely stay away. I think short-term trades are fine, especially if you've done this before and know what you're doing. Also, if you're feeling a bit adventurous, I might put a tiny amount of your portfolio in, literally as a gamble. And I want to say this is not investing. This would literally be a gamble. A small percentage of your portfolio that you would not mind losing. On the off chance that it goes to $500, $1,000, you can make a little bit of money. But on the off chance it goes to zero, you don't really lose any sleep. One thing you should not do is take your entire IRA and put it into stocks that you think will grow a lot, because that is extreme risk, and if that goes wrong, that can really mess up your life. Lastly, I would just watch this. Use it as entertainment and try not to give into the FOMO, because a lot of people will end up losing a lot of money, even though a lot of people are making a lot of money now. So if you're not willing to take the risk, just stay away and enjoy. What a crazy, crazy stock. Okay, I have seen this before with GameStop, but I've almost never seen anything like this before. Where do you think AMC will go in the future? And again, make sure to bop that like button and hit subscribe if you enjoyed, and I'll see you guys soon.